Shark Tank investor says market will crash soon. Here's a clip.
This past week, I saw that The Big Short was trending on Netflix. The Big Short, of course, is a film about the 2008 financial crisis. It's an amazing movie. It needs a bigger
I still
punch
somehow have not seen
when
it.
they break down the banks were collapsing, the lender.
I think for me, I know so much about it that, like, watching it, I should still watch it, but I already know all the details. So it's just like, I could go watch a movie about it, but, I've seen it. But Tim's recommending it. I don't have Netflix, though. Maybe I'll resubscribe. I don't know. It's pretty expensive nowadays, but we'll see. Maybe I'll check it out.
Were collapsing. But for the most part, the movie is absolutely fantastic with an all-star cast, including Christian Bale, Brad Pitt, Stephen Carell, and who else is in it? I don't know. There's a whole... Ryan Gosling's in it. Yeah, he's in Barbie, too. Awesome movie. The movie talks about Michael Burry, as well as a few other investors who took the unprecedented move of trying to short the U.S. housing market. Everyone thought they were crazy. Are you nuts? Everybody pays their mortgage. If you're right, the economy collapses. How long ago was this?
The economy
Maybe
was
like
going to
17
crash anyways.
years ago. Maybe it was 16 years ago.
Yeah, I think 16.
I knew someone who told me that they
assuming
had, their family had given them a
him.
trust. Or, whatever it was. I don't know. They had a bunch of money invested in their name by their parents. And I said, wouldn't you rather have the money to do stuff with? I mean, I get it. It's, it's tens of thousands of dollars. But what if the market collapses? And what I was told was, ha. If this stock goes down, the country implodes. So what do I care? And I thought that was really interesting. The mentality of this was, man, and this might have been before. No, I think it was after the financial crisis. But it was interesting to me that the idea was, what do I care? If the investment goes up, I make money. And if it goes down, everyone's suffering anyway. So whatever. And that's basically the gist of what was going on. Nobody believed the market would crash because they were like, that means that millions of people would be homeless. And it would never happened before in history. And sure enough,
it can't happen.
Let's get to the news. Shark Tank star Kevin O'Leary warns that soaring interest rates will bring mayhem to the economy before Christmas. Really? The investor said that America is headed towards a rebalance because of high inflation and interest rates. The Fed's interest rate is currently 5.5%, but could rise further as Chair Jay Powell tries to cool inflation.
Yeah, they're saying
high interest rate pushes up the cost of debt, which threatens business and households with mortgages. That's right. We could be heading towards the same thing. Which brings me to the big story from the past couple of weeks. Michael Burry, of famed The Big Short movie fame, he made a big bet. In that movie, and it's a movie, it's a dramatization. They even point out some points in the movie, it's really funny. Like there's two characters who find a prospectus, like a pamphlet explaining a plan for shorting the housing market. And they're like, whoa, look at this. Then the one guy looks up, actually, this didn't happen. We heard about it from a friend of a friend, so this is a fabrication. But anyway, it's a great movie. In the movie, Michael Burry says, I want to short the housing market. His investors are like, you're nuts, stop, don't do it. And then he says, you can't even short the housing market. How would you do it? He goes, I'm going to get a bank to create the proposal, and then I'm going to buy it from them. It's actually really simple. I'm not a financial guy, but the general idea is with put options, with shorting a stock. Again, not an expert. My general understanding is you've got three parties. One guy owns a stock. One guy wants to buy a stock. And then there's you. What you do is, let me borrow the stock from you, person A. You then sell it to person B at its current value of $50. You get all that money, but you owe person A that stock. Now,
isn't that basically what a broker does, though? It's basically a stockbroker, right?
If the stock goes down, you can buy it back, but keep the profit and then give the stock back to the person you borrowed it from. It's an interesting way to bet against a stock. With the credit default swaps, it was basically just, hey, I'm going to pay you every month for insurance. And if the stock, the bond collapses, then I get paid out. That's basically the general idea. Well, Michael Burry is now making a $1.6 billion bet against the U.S. stock market.
Wow.
And they're mocking him and they're laughing at him, even while
he did it
all the data
time.
points are coming out.
Yeah, and he did it
so
last time
fascinating.
in 2008.
In the movie The Big Short, there's a part of the film where all these guys who bought these credit default swaps are watching defaults escalate, skyrocket. Mortgages are collapsing. And they're like, certainly, these bonds must become worthless. They go to the banks and the banks are like, no, everything's fine. we're going to keep valuing your bond very high. And they're like, how? It was fraud. Apparently what the banks were doing, they knew the bonds were collapsing. The subprime mortgage loans were worthless and people were abandoning properties. So instead of publicly announcing, they secretly started offloading these securities to other banks to minimize their exposure, knowing the collapse was coming. Evil. And then it happened. In the meantime, Michael Burry and others who bought these swaps were facing losses. They were paying premiums despite them knowing what was going on. Finbold writes, here's how much Michael Burry is down on his $1.6 billion bet against the stock market. Now, this is different. With put options, it's more so when you have to, when they come due or get called or whatever. Again, not an expert on this stuff. But you can hold on to these options for a long time and not realize any losses or gains. So, here's what they say. 15 years after his famed bet against the mortgage market led to substantial gains, legendary investor Michael Burry has once again set his sights on a major financial maneuver. This time he has taken a big short position against the stock market by purchasing an impressive 40,000 put options against put option contracts tied to the SPDR S&P 500 ETF Trust and Invesco QQQ Trust. The disclosed data from earlier this month showcased a combined nominal value of $1.6 billion for these contracts. However, it seems that for now, Burry's short position is at a heavy loss. Notably, widely followed stock trader known as the Gergavin on Twitter revealed on August 27th that Burry is down 42% on his short bet, assuming that the investor is still holding the positions. It is important to note that while the combined notional value of the two positions was a whopping $1.6 billion, Burry spent only a minor portion of that figure to build his new big short. According to Gergavin's estimates, the fund manager likely only spent around $26.5 million to build his short position. In particular, he invested $18 million on 20,000 SPY put options and about $8.5 million on 20,000 QQQ puts. There's a possibility that Burry built the two positions as hedges aimed at softening the blow to his investment firm Scion Asset Management if the stock market declines and its long positions lose value. On the other hand, the puts could also indicate that Burry is feeling bearish about the two flagship index funds, which are significantly impacted by large cap stocks such as Tesla and Nvidia. Meanwhile, it should be emphasized that it remains unclear whether Burry is still holding the two contracts, given that there has been no update on his holding data since June 30th. Perhaps he sold them. Or perhaps, doesn't matter. Next year, anybody paying attention to the political turmoil might suspect that for political reasons, stocks will collapse.
Yep.
General market downturn.
Yeah, that happens a lot. Like 2008 election year, the Great Depression, I believe, was an election year. Wasn't it 28? I think 1928. I can't remember. But yeah, I've seen this data before. Like when generally when the economy or like the stock market and the economy take a super dive. Yeah, it's generally in election years, 2000, right? Or the year before, 1999, 2000. No, it's 2000, right? The dot-com bubble crash, an election year. Yeah, it's interesting how that generally happens. So this year is or the year before the election year, and next year is the election year. So yeah, probably if it doesn't crash at this time, it'll crash in 28. I mean, the debt's so insane. It has to crash eventually, and they keep printing more and more money. So I thought it was crazy this year with the whole debt ceiling fiasco. They're just like, okay, no, we'll just raise it by another $4 trillion. No, it'll never collapse. It'll never collapse. Especially with the interest going up. Now we have to pay out this interest. Man, if hyperinflation comes due, it already seems like it's happening, right? Because the inflation, it keeps going, the interest keeps going up, and inflation keeps going up. That's not what's supposed to happen according to Keynesian economics, right? You go and raise that, and then the inflation drops, and then you're okay. But if the inflation keeps going up, and if there's like hyperinflation, then what do? You raise the interest, but then all of the debt comes due. But then again, America can print all the money that they need, but then the dollar goes down even more, and that's the cycle people predict. Or cycle, like the event that people predict is going to happen.
Wonder. I can only say this. If Michael Burry is correct, Donald Trump likely wins in a landslide. And by landslide, let me clarify for all you wingnuts. I mean that figuratively. I don't know what landslide actually means. I'll say Donald Trump wins decisely. If the economy takes a major hit, Trump comes
Even
out.
if the economy collapses under Joe Biden, they'll just rig it. His job reports are all nonsense. I was on Threads randomly earlier. I think about posting my stuff on there, but I'm like, oh, it's also left wing. They're going to hate me. But he's like, top-down economics doesn't work, but the jobs report shows that Obamanomics does. Okay. That guy must be making a good amount of money off of something that he had before. Because normal people, my roommate works in the service industry, downtown Austin. He has 2 jobs. And they were like, okay, July's, because it's Austin, not a lot of tourism in the summer, especially it's been so hot. July's going to be the worst month. And then it starts picking it back up in August and then September and October. It's amazing, right? But July was way better than August this year. Because my roommate works there. You could just tell the money. And it's just like the economy is just that bad that people that have worked in this industry for years and years and years, they've seen this, the economy, even through COVID and everything. They've seen all of this pre-COVID. And now this year they're like, okay, no, it's July's the worst month. And then August was worse, quite a bit worse. So maybe 30% worse than July. And they thought July's going to be the worst. So you can just go see how the economy works with these real world stuff and look at inflation, look at the prices of everything, right? You could just see it. But then people are just like, oh no, the jobs report is good. It's like, okay, yeah, right. They fudge those numbers. I've heard about this for a long time. What they do is they go and the jobs may be going up, but it's like people will get 2 jobs. And they count those as the same. And they count part-time. Sometimes people lose their full-time job and get 2 part-time jobs. Obama used to do this all the time before Trump. So I've known about this type of tactic for a long time. I didn't dive into the jobs reports because I honestly just don't believe them. So I just don't care. But they've used this tactic for a long time. And if I had to bet, it's not going to be helping the economy. And a lot of these jobs too, which I've seen a tactic of, is old people. They'll be coming out of retirement and getting jobs. And they're like, oh, no, look at how great it is. But it's like because all their money got lost, they have to go out of retirement, and that's good for the economy? No, that's awful. That's terrible for the economy. All this inflation is awful for the economy. It's terrible. So, but these people on the left, they're like, oh, no, it's great. But if I would have bet if the market collapses, yeah, they'll probably even end up going to Trump because there's no hiding it. A lot of these people, though, like on Threads. I mean, anyone that's still active on Threads is probably just someone that just doesn't want to go to Twitter, X, whatever they're calling it. They're just like, no, X is good for conservatives. Screw them. It's crazy when I go on Twitter. It's like a mix of conservatives and leftists. Even True Social is. People would be surprised by that. But if you go look at Trump's posts, a lot of the leftists are on there just for whatever reason talking trash about Trump. So even that, but Threads, just all of them are leftists. So if you really want to go see the side of the leftists and what they think, go on Threads. It's fascinating because you could just go see every leftist of what their ideas are and what they think about like all these situations. Because they'll post about the Trump indictment, about the Biden's jobs. They'll go and post about all this stuff. So if you want to know what leftists think and what their perspective is, go check that out. But yeah, so I wonder. So if the market crashes, I'll be on Threads. Check it out what the leftists think.
And the incumbent loses. If he's right about this market bet, then we're going to see Trump 2024 win. The economy takes a hit in election year, and that is apocalyptic.
Yep, for the president.
For the party currently in power. Donald Trump comes out and then says, remember 2019? We had excellent gas prices, very low. Some say the best. $1.40 for gas. Now, you can blame the global lockdowns for that, to be completely honest. But gas was still around $2 on average. And then Biden took over, and now it's around $4. I don't know about where it's at by you, but it's around $4 by me.
Shouldn't be surprised.
And we're in a more rural area. Typically, gas is a little bit cheaper here. That's already bad enough because gas prices track alongside political elections. I got to say, there are fears about all of this because even Kevin O'Leary is saying there's going to be a rebalancing this year. So perhaps Michael Burry is correct.
Yeah, this year,
and he can realize massive gains before Christmas.
And also generally, I was talking earlier about how they usually markets crash usually election year or the year before. It's like almost always in the fall too. It's very fascinating. I don't know why a holiday season. It's not trying. I don't know why. It's fast. You can go back to the Great Depression and look at this stuff. It's very interesting.
What does that mean for all of you? I have no idea. I'm not a financial guy. I couldn't tell you what to do. I don't even know what I should do.
Buy gold.
Everyone's got some idea.
People are like, oh, crazy. You're going to buy gold. Who's going to want gold? But people used to use it. And if everyone uses it, gold and probably Bitcoin. I used to be way more bullish on Bitcoin, but, some of the flaws of it have come out the last few years, and it's not really, everyone thinks it's anonymous. It's not. If they have your wallet ID, if they see your ID, you can just go look at every transaction you sent to any other ID. So if they know all your IDs, it's right there in the open. But yeah, crypto would probably be great. Gold and silver. A lot of people say like water and ammo. I would agree with that too. Anything that you can keep for a very long time and resell. And there's a lot of it. Who knows? Maybe ammo would become the new currency. I highly doubt it. I think it'll be just go back to being gold and silver, right? Or a cryptocurrency. But yeah, that's what I would. Holding dollars is insane, especially with inflation. How bad inflation is right now. It's crazy to get any other. My one friend, he didn't want us. He works for Tesla here in Austin. He's like a financial guy there. He was like, I didn't want to be saving all my money. I wanted to build equity. So even with high interest, he went and bought a house. And I was like, yeah, that's probably a better idea than just holding money. Even with his interest is so crazy. I was like, wait a minute. How is it so expensive? If you're paying that much per month, shouldn't you be paying that off in 10 years instead of 30? He's like, well, that interest. I was like, it's that much. Wow, that's insane. So that's what I'd get, equity or gold and silver. There's no interest on that. So I haven't looked in a while, but gold generally tracks with inflation, so it's just gonna stay up.
Some plan,
you would think.
But I'd be willing to bet the guy who made, what did he make, like $500 million? That's the number they gave in the movie, $489 million. A guy, no, I'm sorry. He made like 1.3 something billion, I think.
Yeah, I was about to say.
The value was around 1.45 billion. He bet 1.3 billion, and then he came out with 2.69 billion or something like that.
He wants to even do bigger this time.
And if he is, maybe talk to a financial advisor about what you should be doing right now.
Don't
I have to
talk
be worried
to a
about what this means
advisor.
for the global economy, because if the crash does happen.
What's so funny, unless you get a really a financial advisor that's really bullish on the market, bearish on the market, like they think the market's going to go down like this guy does, that's the only way I would listen to a financial advisor. Peter Schiff, go talk to him, but he's going to tell you to go buy gold, most likely. But yeah, I mean, like, unless you go to like someone like him, Schiff Gold, I'd talk to them if you're going to. I forget his financial advisor company. But yeah, go talk to Peter Schiff if you're, because he's been predicting this. He predicted the 2008 crisis, and he's been predicting this for a long time. I think Trump held it off for another 4 years. If it wasn't for Trump, I think it would have happened probably in 2020, the crash. Because I've heard Peter Schiff talk about this since 2015. But then Trump got in there, helped the economy out. I think it delayed it. So, yeah, this is probably coming, but don't just talk to any financial advisor, like Tim is saying. I don't know if that was his thought, really, but don't just go to talk to, because they're just going to be like, oh, no. The stock market always recovers. If you go bet on this, if you go look at the stock, Graham Stephan, I like that guy. I watch him. He's kind of like a financial advisor guy, but I don't know if I would necessarily trust that guy, because it's unprecedented. But I mean, he's probably right. If you're going to hold on to the stock for 30 years in real term values, it probably will recover if the company doesn't go out of business. But I like gold because it's sure. It's kind of like sure-proof. Will it go up as much as stocks historically? No, but it's a safer bet. Because they a bunch of digital gold companies like Venmo might just switch to gold. PayPal might just switch to gold. People think that sounds outrageous, but to me it doesn't at all. Because they're like, oh, everyone's just gonna have an ounce of gold. No, it's gonna be like Bitcoin. You have a little piece of gold. Like that's what people used to started doing in Rome, right? They started breaking off little pieces of the coin because it was silver, and they started dividing them up as inflation hit. So, yeah, you just have a little piece of gold, and it's like similar to Bitcoin, but then it's backed up by a company, and then you could go get the physical gold if you want. Gold Money, Peter Schiff's company, he tried, I don't know if it's still operational, but I used it like in 2008, and it was really cool because you can buy gold, but then when you go to, it's like a debit card, and when you want to go buy something, you can go swipe the debit card, and it auto sells your gold and gives you dollars, and then you can use the dollars. So you can actually go and invest in gold, and you're not out anything because you just go put that into gold, and it just auto sells the dollars. I think Bitcoin companies also do that. So I think that's the way to go. Stocks, stay away from them, in my opinion. But just to be clear, I think there's some legal thing. I'm not a financial advisor or anything. I don't have a license. I don't have any of this. This is just my own personal opinion. I'm not trying to give advice necessarily. I'm just saying this is what I would do.
Time when the BRICS nations are poised.
I know I'm saying you should do this, but at the same time, I guess legally I can't say that. So really, I'm just saying what I would do if I was you. So
their own currency and are trying to compete with the petrodollar. That's going to be their time to strike.
Yep. The BRICS.
It's bad news for America, my friends. But I don't know. I'll leave it there. No. Next segment's coming up at 1 p.m. on this channel.
People say that. I don't know. I mean, it just depends what happens after the dollar collapses. Like Trump was saying, if we lose the petrodollar, America's done. That is not true. The reason why America has the petrodollar and is the reserve currency is because the power, the economic might that America has. I was watching this. I think it's Real Life Lore. There's a lot of these educational channels I watch that are really cool. They'll have like long form stuff and they'll inform you about it is whatever. So 2 examples I have. Why America is such an epic economic powerhouse. It's because like the Mississippi, then the oceans around like Florida and stuff, they naturally have like, I forget the name of them, but they basically have like barriers behind the ocean, and it's just natural. They're like basically rivers right on the ocean, and these little pieces of land separate the ocean from these waterways. So then they could go in there through storms, and those are from like Louisiana nonstop all the way up to New York. So there's that. And then the oil is insane. America, from fracking, America is by far the most oil on the planet, by far. So there's that. So if we lose the petrodollar, it just depends. If we could go back to gold, and without the petrodollar, we couldn't afford all of these welfare programs and all of this nonsense America does in general, all this crazy spending, all this military spending. If we didn't have the petrodollar, we couldn't be doing any of that. And same thing with the Federal Reserve. If they couldn't print money, you didn't have the income tax. And a lot of people don't like, oh, what are we going to do if you have the income? Get rid of the income tax. The income tax only started in 1913, 110 years ago. And America was a huge powerhouse before that. So I think if we dropped the petrodollar, got rid of the income tax, basically just what I say is import-export tax funds the federal government, sales tax funds the state government, and then you have property tax that funds the local government. So everything will still exist like it has been. It will just have way less money, so people will just have to take care of their own stuff, but who cares? I think that's a plus. And that's going to help the economy tremendously because all this money's not going to taxes and to military things that we probably don't really even need. It's not going through all these alphabet agencies. It's actually going to producing stuff in the manufacturing hubs, and then they can afford to have manufacturing in the United States. It's weird. Like before the pandemic, people in Canada, they would like ship their lumber to China to have it build stuff, and then have it that built stuff shipped back to Canada. I heard that before. It's like, why wouldn't you just build it in Canada? Because it's cheaper because of the taxes. So get rid of the taxes because that doesn't make any sense. You have to go ship it all the way there, have them build it, and it still ends up being cheaper. Yeah, get rid of the taxes and everything, and it'd be way better. So the petrodollar being gone, everyone thinks it's going to be the end of the world. I don't think so at all. I think it would actually help the United States. Again, if the government changed with it, if they're like, okay, well, now we can't afford welfare, so the taxes get turned down, and because of all this, it gets more like, right-leaning, so to speak, where, we cut the taxes and everything. But yeah, I mean, I could see a scenario where it's just like, okay, the dollar collapses, and then they just go more ham and like, we need more taxes. And if people actually pay them, then the United States is going to be done. But if you go and get rid of all these programs because they can't afford them, because the petrodollar isn't there anymore, so we can't just put money into oblivion, I personally think it would be a huge plus. It'll be a few years of turmoil, but then we'll go back to just being, economic powerhouse where they're not taking all of our money and everything. People talk about this. John Paul talks about this. Peter Schiff talks about this. In 1950s, you would go on a skiing trip to like France, and they'd be like, "Oh, American-made skis. This is crazy. Americans are the best." Now people don't say that as much as about America. They say that about America about certain things, but it used to be everything in the 50s. Everything. America was the best at everything. Manufacturing powerhouse. Look at what Henry Ford did and everything. But then you get these income taxes that when they created them in 1913, it's only going to be the top 1% is going to pay income tax, period, ever. And then you fast forward 100 years later, and everyone is paying like 30% of their income to income tax. And what's ironic is the wealthiest people know how to write things off of their taxes. They know how to move stuff around. They know how to invest smartly. So they're actually paying the least per cap. They're not paying 30% where a normal person's going to, if they don't have kids and stuff, they're 15, 30% or whatever. A wealthy person's not paying that. They're writing like everything off. So what they said in 1913 was a giant lie. But if we didn't have any of that stuff, if we just went back to the basics, all this government wouldn't be as big. We'd have way more freedom. You'd have more local stuff because property taxes, everything's kind of equal. You'd have way less people buying abroad shipping because you have import-export tax. So it'd be cheaper to harvest here, build here, and sell here because you don't have to pay the import-export tax. So the items are end up going to be cheaper instead of shipping them to China where they don't have to pay all the taxes. They don't have tariffs, right? Then China's going to be cheaper, and then nothing gets built here. But you get rid of all that, U.S. will I think will become a mega, like the United States, like I was just saying, of like the oil and everything, is already an insane powerhouse. Could you imagine if we got rid of the income tax and all these other taxes, just kept those three taxes: property, state sales tax, and then import-export tax? Man, the United States would go insane. We don't need the petrodollar. The only reason why we need the petrodollar to do all this stuff is because of all that.
If you like this video, be sure to subscribe for daily news updates, smash that like button, share this video with your friends, and share your thoughts on the story in the comments below. I'll catch you in the next one. Peace out.